Let's also look at Allstate, ALL. Same basic thing here. Although you have earnings in a little bit, but it broke out, pulled back in, found support at its 50. Now it's moving up. Go out to the monthly on it. So this is not a dynamic type of stock, but this is where the money is flowing. And sometimes you want to see that because it's another sign that the market is weak. So you can look at the SMCIs of the world that are, really in a bad position, worse every minute, and these to get a gauge, it's not a healthy market right now at this moment. Where we close will dictate a lot because you can have a flush or a shakeout midday and come back up. And then the chart looks completely different. But at this point, as we've been saying all week, if you haven't reduced risk, you got to do it, in my opinion. That's my take.
Right. So would you be buying Allstate or American Express, or you're just looking to see where the money?
I'm not buying anything, unless it's like an inverse ETF, but I wouldn't bet. Oh, Anne has something. Go ahead.
Yeah, Anne-Marie.
The great thing is if you're looking at this and you're thinking to yourself, wow, we can see money moving in there. You can go sell a short put spread way out of the money for just a little bit of bucks because you see it moving in there, and you can do it short duration, right? So it might be you are getting 1 but risking 7, but the probability you're going to be right is 98%. And so when you're looking at this, here's the great thing about this option space. When you're looking at something and you go, I can't buy anything, then the question might be, how can I leverage what I have to generate some measure of revenue stream? And those, if you went in and you said, all right, what is the base of the last event this one had? It's maybe we say 150, right? That's really low from where the last breakout was, right? It looks like maybe 153 might be the last breakout, but we can look at 150. And let me see how much they are right now, because it seems like a low vol stock, a low volatility stock. But if you went to June and you said, you know what, I'm going to sell the 150, 145 spread, you're looking at 40 cents that you're going to collect, right? But it's $5 wide. Here's the thing. You've got a 97% win rate sitting attached to that as calculated by Delta. For those of us that look at the options and we're like, hey, how do you get that? When you open up your option chain, you're going to see all the way to the left, you're going to see it gives you a net delta of your position. And that net delta is the probability that spread is going to close in the money. And if you are selling something, you want it to be out of the money. So you look at the opposite side of that, and it gives you, that 97% probability that you're right? And if you're saying to yourself, well, I'm only risking 40 cents, you don't want to wait until it's deep in the money and you're down the other $4.60. You might go, you know what? If the price of that spread moves up to $1, I'm getting out of there. And so instead of leaving yourself open to all the risks, you go, I just want it to move in my direction. If it doesn't, I'm getting out. And if it does, I'm going to sit tight.
Great. So you would be looking at the June expiration and then what strikes again?
The 150 to 145. You might say, well, Anne-Marie, why can't I do a 150 to 140 if I think that the price action is going to, hold in my favor, and I get, instead of 40 cents, I get, almost 70 cents, right? So here's the thing, just sell 2 of the 150, 145s. It'll give you the same amount of risk, but instead of 67 cents, you're going to get 80. Does that make sense? 150 to 145 gives you 40 cents. If you buy 2 of them, your total risk, or sell 2 of them, excuse me, your total risk would be that $10, but you're also collecting 80 cents.
Awesome.
As opposed to, you don't want to, that's the thing. A lot of people go, hey, I'm going to use, if I buy a short put spread or sell a short put spread, I'm just going to make the strikes really far apart. If you do that, you're going to give up premium. Make the strikes as close together as you can and just sell multiples of them. You're going to make more money that way. There are certain things that don't work like that. Like butterflies, broken wings, other weird kinds of things. But in general, you do this and that's the best way to do it. Makes the strikes close together and just buy more of them.